All right. Good evening. Welcome to America's Heroes Group live stream. I am Lisa Gavin, and my company is Next Level Coaching. And Next Level Coaching is designed to help you get coached to another level when it comes to your financial literacy. And we have something we call money mastery coaching because these days, believe me, we've got to be a master of our money instead of our money being a master of us. So, tonight we're going to talk about this evening making financial steps to adjust in 2025. The interesting thing is that this year has been very interesting, to say the least. Some of us don't want this type of interesting, right? So that means, though, that we have to be prepared for the unknown. We have to be prepared for the unexpected. Those of us who really strive to live very stable lives, uh, these times are challenging for us. So imagine how much more challenging it is for people who are not as financially stable. I think that we're going to see that those individuals will really go through some struggles in these times. So, what are we talking about when I say these times in 2025? Let's keep it clear. Let's be real clear. We are dealing with potential stock market issues. I shouldn't even say that. I should be very specific. Stock market crashes, right? Because we already have stock market issues, but we are running the risk of the stock market actually dipping even further. We're dealing with losing the gains that we already had. We are dealing with these taxes, tariffs, which are taxes. Uh, we're dealing with the repercussions of that. And we haven't even seen all of the repercussions that's going to come from that because it will absolutely impact prices. I'm not going to get into a whole entire thing about tariffs. But let me say this to help those of you who don't understand it, it is a tax, that it is. When tariffs are implemented and uh, companies from the US are charged more money to acquire those goods overseas, the company here in the US pays that additional tax or tariff. Do you think those companies are going to pay a lot more money to get the things that they want to sell to us and that they're not going to pass those costs on to us? It's so simple that I almost it gives me a headache. If a company pays more in materials or anything, they pass that cost to the consumer. So one, understand that. Number two, understand even if the goods are made here in the United States, but those goods use supplies from around the world, which most of our goods do, because we do not produce everything here in the United States, it means that this it's still going to be an increase in cost. That's still going to be passed to the consumer. So the point is, we are dealing with that coming down the pipeline. We are also dealing with interest rates and the uncertainty about that because the Feds just announced that they have no clue what the interest rate policy is going to be because of the lack of stability coming from the White House. So that's more uncertainty potentially coming down the pipeline. It's going to be housing issues because those costs have been going up and probably will continue to go up. There's going to be job insecurity. There's going to be some loss of jobs, as we have rapidly seen in the last couple of months. Hopefully, nobody has been impacted. But the truth of the matter is, I've I know multiple people who have been impacted. So job insecurity, because even if you weren't directly laid off as a result of the actions of the White House, There's still a possibility that you work for an organization that lost funding. Or there's a possibility that your company decides that it wants to downsize because of that uncertainty. So there's job insecurities and things like that that you may have to deal with. Uh, and if our everyday prices, oil, food products, are constantly going up, well, then that means your dollar is not going as far. So all of these things are absolutely going to impact us. And the best thing that we can do is hope to, in some type of way, mitigate the risk. Or we can hopefully look for a way to stabilize ourselves even more than we are to be prepared for the changes. And so that's where next level coaching comes in for us, is working with our clients to help them develop a plan, right? This is going to be a plan that helps you figure out how to maneuver. Because I'm telling you, maneuvering is about strategy. So if you look up the definition of the word maneuver, it's strategy, strategic moves. Now, here's the challenge. Most of us don't have people in our immediate family that are very experienced with these strategic moves, or we were not taught it in college. And let me tell you this, because in my quote unquote infinite wisdom, having an MBA, that's a master's in business administration, I was not taught the stuff that I'm helping people with in school. So even though I got a business degree, they didn't teach me credit. They did not teach me funding. They did not teach me stock market and investments. They did not teach me the things that you would think an MBA would garner. So please, no shame, no shame if you do not have these skills in house. Most of us don't. And again, if you're not getting them in school, or you don't have other people that is their actual expertise, then that means you're not getting the proper advisement and coaching. Now, let me tell you this, because for me as a coach, I'm always getting coached. I went to a workshop by an individual that literally charges $100,000 a client. And he gave some extraordinarily sound advice. And I'll share it with you because it's very relevant to this conversation that we're having. He said, we should stop listening to opinion and only get advice. What does that mean? Opinion is just somebody who has a thought about what you're saying. That does not necessarily mean that that person has experience and knowledge in that particular area. They're just telling you their opinion. It's like most people, when you talk about a movie and they say, oh, yeah, that movie was great. They're not movie critics. They don't do it professionally. They're just giving you an opinion. What you want is advice. Advice is different. Advice is from people who have the experience. They've been there before. They've done not maybe exactly what you're doing, but they've done elements of it. They understand the risks, the challenges. And you know why this is important? Because if you talk to people who are just giving you opinion, what happens is you end up going in the wrong direction, because you're taking their opinion to be advice, as if they have this infinite wisdom that you need. And most people are full of opinion. So we need advice. And part of that advice, coming from a person qualified to give you advice, is that we need to figure out what we don't know. We need to be able to come up with strategies that help us to move forward, even in difficult times. You're going to get a lot of opinion thrown at you about what you should do in times like these, right? So that's what we're going to talk about. We're going to talk about just some of the things that I see as ways to maneuver and to implement strategy at a time like this. So, one of the first things that it's important for people to do is that they need to understand what is going on in the market. So, read, listen, and I would definitely tell you, don't just listen to mainstream media. There are a lot of great channels, especially on YouTube, with people who are not in the mainstream. And the reason that that's important is because they give you the entire story. Most of the time when you're watching the news, they're only going to give you, if a 1 minute blurb. Do you really think that you can capture the fullness of what's happening in 1 minute? They're giving you the headline, they're giving you the sound bite. That is not enough to fully understand what's going on in today's market. Now, I know it's overwhelming because the changes happen every day. But the point is, if you can find some good channels, I listen to Midas Touch, for instance. And this is not a plug for them. I don't get any money for it. But they are really good at reporting the entire story and all of behind the scenes of what's going on. So you may want to find some not mainstream media places to listen to what's happening in the news. The second thing is you need to understand where your vulnerabilities are. So if you're in the stock market, then yeah, you're going to have some vulnerabilities there. If you have a 401k, you may be facing some potential challenges because if your 401k is not conservatively invested, it's going to be affected by the stock market. You may want to analyze and pay really close attention to the different types of credit you have. Why? Because if you've been in a pattern of bad credit or subprime credit, then it's going to be more difficult for you to pay those bills. What do I mean by that? Well, if you have a debt that has a high interest rate, that means your monthly payment is going to be higher than the person that has a low interest rate, right? So that's where interest rates come in and make a difference. So you have to start looking at, is that a risk area for me? And if it is, what do I do about it? So we'll talk about that in a moment. Employment security. There's not a whole lot that you can do if your job is just, you just lost a job. I do understand that that's a challenge that nobody can just tell you, hey, no big deal, right? But I tell people if they want to mitigate risk, looking at starting a business is potentially something that you can do. Um, Turn your side hustle into a real hustle, right? Because a lot of people have side hustles. Maybe this is a good time for you to evaluate it a little bit closer and to say, hey, is this an extra way that I really could make some extra money? Because nothing mitigates nothing levels out loss of salary as new salary or loss of income as new income. So if you are facing potentially losing income, start looking at other ways that you can start to replace some of that. Okay. um, the other thing is that we have to get better about how we're managing our money. This is where money mastery comes in for us. A lot of people don't pay attention to their financial waste. How often are you ordering out on Uber Eats? At one point, for example, I realized I was spending $600 a month ordering out at work for myself and staff. I'm sure they like the benefit of being fed, but I didn't have to do that every day. And I'm sure I like the benefit of just saying, hey, send me something because maybe I didn't have to package my leftovers from home. But guess what? When I realized how much money I was spending, oh, believe me, I've completely flipped the script because I only order out 1 day a week. Every other day is probably food and leftovers coming out from home or things that I could easily prepare at work. So those are sacrifices, but that is how you mitigate risk. Excuse me. Making sacrifices can be a critical way of mitigating risk. because you want to be in position that you can hold on to more money. In times like these, we have to get a lot more analytical, a lot more strategic, and a lot more creative about what we're doing with our money. So for us, it's really about understanding where a client is in their process and then figuring out how to get them in a better position. So I'll give you from a start to finish. I may have a person at the start that has poor credit. The first thing we're trying to do is help them strategically figure out how to improve that, what things to prioritize, what debts to pay off. Because, yes, sometimes you will have to pay some things off. Things don't just magically disappear in credit repair, despite what folks are out here selling. Okay. But strategically, if you have a plan for what you're doing with your credit improves. If you know what things are driving your credit scores, you know what debts and things to prioritize, you know what issues to try to settle out and get rid of, the things that are holding your credit back. You'd be surprised how often I get a person that literally they're ruining their credit scores because they're upset because a company didn't take away a fee or a charge that they didn't think was valid. They got mad, they stopped paying it. Are you kidding me? Now your credit scores, you get a 30-day late, 60 days late. You think you're punishing that company? No, you are punishing yourself. So it's so important that people understand what things are driving their credit scores and not get into these petty arguments, issues, trying to not deal with it or thinking that you're making a stance. And the only stance you're making is to ruin your own credit. So, we'll start with a lot of our clients there, helping them develop the strategy to increase their credit scores. Why is that a strategy we had to help people with? Because again, I have a master's degree and wasn't taught that in school. Most people are not taught, other than pay your bills on time, what it takes to build strong and high credit scores. We help advise our clients in that. The next phase for a lot of people, and a lot of our clients don't start with credit problems. They just aren't optimizing what they're doing with their credit profile. Another phase for people, again, helping to mitigate risk, is to get funding, get in position to get funding. If anything happened, Lord forbid, lost a job or some other, or a loss of another family member's losing income and income's not coming to the household, different things that happen. Um, do you have any backup money? Getting yourself in position for funding helps to mitigate risk. Why? Because, banks don't lend to people who look desperate. Truth of the matter is, if you wait till you look absolutely desperate and you need some money, the bank is probably not going to give it to you. I know they like the people that walk in looking shiny. Okay. Because a bank's in the business to make money, not lose money. If you come in and you're too risky because you come in and by this point everything is maxed out and you're financially stretched and stressed, do you think that they trust that you're going to be able to pay them their money back? Probably not, right? So you want to be planning to make a move on some of these things. Get in position to be able to get funding. Do not wait until things fall apart to do that. Okay. So again, the ability to get funding helps to mitigate risk. The ability to have higher credit scores and to get yourself in position mitigates risk. The ability to, even if you're not trying to get funding, to perhaps refinance things to get your expenses down. That's an important strategy that people miss the boat on. I'll give you an example. Let's just say you bought a car. And at the time you bought a car, your credit scores were a little compromised, right? So you're stuck in a high interest rate. Okay. You're in the teens. Lord forbid if you're actually in the 20s, but in terms of percentage. But they didn't give you anything single digit because your credit scores were challenged. Did you know that after 6 months of on-time payment history, you probably qualify to refinance that vehicle loan? You know how many people don't refinance? and just stay at the horrible interest rates they were charged? Look, it happens. It happens that you're in a situation where you just need to get this car, your credit's not ready, something happened, whatever, right? Excuse me. 6 months of on time payment history can potentially change that. And by doing the refinance, and there's companies out there, you get your monthly payment down from 700 to 550. Wouldn't you love to have an extra $150 per month? I mean, again, mitigating risk. If you have additional cash flow, additional money that's in your pocket, in your bank account, and if you more particularly focus that money for a particular purpose, maybe that money goes to pay off a debt faster that you're trying to get rid of. And by getting rid of that debt, now that's one more monthly payment that you're not kicking out every month. That's one less bill that you're paying every month. I work with my clients all the time with debt strategies. Avalanche is one of them, you know, and I'm not going to get off into the meanings of it, but the truth of the matter is they're just strategies to figure out how to get rid of debt. Are you going for the big ones first? Or are you doing a snowball and you just, you're doing the small ones and it snowballs to something bigger? So those are different. There's different debt strategies to look at. But the bottom line is without a strategy, you don't see the progress. But strategies and plans mitigate risk. So do you see the theme here? Everything is about how we mitigate risk. And I'll give you another story, just another way that people move and maneuver. I had a client, for instance, that she had great credit, perfect payment history. However, something did happen. And rather than her getting a loan for those things, she used her credit cards to just get through, right? And I'm pretty sure she assumed that she would be able to just, money would keep flowing and she'll be able to pay these things off. Well, unfortunately, it didn't happen that way. And so she was just kind of stuck with high usage and all of her credit cards maxed out and none of the, avenues to pay those things off was happening, right? So she didn't know how to get out of that situation because it did hurt her credit scores a little bit. It didn't tank them, but it hurt, right? Well, we were able to help her get a consolidation loan. No, I'm not talking about consolidations that, where a not-for-profit says, hey, give us all your bills and we'll work something out with your people and we'll try to reduce some interest and we'll make some monthly payments for you. That's not consolidation of debt. That's just consolidation of bills. Okay, that's consolidation of where you pay your bills. A real consolidation completely pays off the debt. And so in her particular case, they gave her one loan for a lump sum amount, let's just say, for example, 20,000, and she was able to pay off 20,000 worth of credit cards. Not only did she not have to still pay those 5 credit card companies money every month, let me note, she did put those credit cards up though. She didn't go back and recharge them, right? Important part of the story. They can't jump out your wallet and say, here I am, and charge by themselves. Leave them at home, okay? But she was able to have one monthly payment. The interest rate on that monthly payment was lower, right? It was one payment, and she did not have the risk of missing a payment with those 5 other companies. So you might say to yourself, well, what difference does it make if she's got 20 over here and 20 over here? Aren't they the same? No. When you pay off 5 credit cards that were maxed, it alleviates the pressure on your credit score. Why? Because credit scores are a measurement of risk. So if you don't have 5 different people to pay, you certainly look less risky than the person that has 5 people to pay and all 5 of those accounts are maxed out. Now you just have one loan over here, you're paying it on time, and that's an installment loan. And installment loans are just kind of slow and steady. Just keep paying them on time and they grow your credit score. But when your credit cards are maxed, they tank your credit score. So when people make that move, when they trade that 20,000 over here for that 20,000 over here, they actually increase their credit scores. And so once those credit cards report paid down, now you're in position to do the other things that you want to do. Maybe refinance the car loan, maybe refinance the mortgage. Now, keep in mind, in these times, you have to be very cautious, especially when you're looking at refinancing mortgages, just simply because mortgages and mortgage rates, you have to look at what your current rate is to make sure that there would be an advantage to you refinancing. Otherwise, do not do it. But the bottom line is you can evaluate other moves that you can make once you free up some of that money from restructuring your debt. So the bottom line is that, all of these things are really about strategy. And a lot of times we need help figuring out that strategy. And that's where good coaching comes in. People who are not giving opinions, but giving advice. And for me, I've been in business for 20 years and I've been giving advice for 20 years. I've serviced over 25,000 people. I've given out a ton of advice. So I feel qualified to say, hey, get professional advice. Now, does that mean I'm the only person that can provide it to you? Of course not. Again, if you're selecting people that you know and family members and professionals, vet those people. Make sure that they understand the difference between giving you an opinion and giving you advice, and if they really do, in fact, know what they're talking about. We have been really trying to extend Next Level Coaching as a company to do more advisement of our clients and with clients. So we've developed lots of new programs. One of our favorite ones is Coach to Cash. I think it's our favorite because I love the name. We're going to coach you to some cash, right? And it's helping people understand all these strategies that I'm talking about. Looking at the two major pieces of your strategy, which is credit and funding. And then shifting those eventually to potentially business ownership, because we also help a lot of our people develop business credit, because business credit, don't tell them I told you this, is a great place to hide your debt. It's much better if you're doing your hustle, but your hustle structured as a business, and that business has a business bank account, and income and money that you make goes into that business, because now you're positioning yourself to actually have a whole nother income stream that comes in, that gets the respect that your check stub gets, right? Lenders love seeing your check stub. They love seeing that you make money. But if something happens, you want to have a backup plan. But our Coach to Cash program is one of the things, one of our favorite programs that we use to help educate people with the strategy. So, it's very important to get a strategic mindset about this stuff. And if you don't have it, if you haven't learned it, it is never too late to learn. It's never too late to realize that, that needs to be coached. Because, for instance, most people listening to this, if you have a favorite sports team, you probably know their record. You probably know what their wins and losses are. Okay. You like, oh yeah, the Bears, they were 18 and I wish they was 18 and something. they were 12-3. I even wish they were that. But the bottom line is, you know what their record is, right? Well, do you know what your record is? What is your win-loss record when it comes to how people look at you? How strategic are you in terms of making sure that you're looked at as a winner, somebody wants to give money to? So, the bottom line is, I really would like for you to understand that just like we get coaches, the Bears have coaches, people who want to do anything well have coaches. Your money and your money strategy needs a coach. So check out coachtocash.com. Coachtocash.com is one of our programs, and it's really a good way to understand how strategy can help you. So I hope that you have enjoyed being with me this evening, and remember, mitigate the risk through additional strategies.